Something is happening right now in the silver market that no one is telling you about. The Shanghai Gold Exchange, the world's most critical silver market, is failing to deliver. Yes, you heard that right. Deliveries are collapsing. The price of silver? It's climbing. But what you're seeing on your screen, it's a lie. Stick with me and I'll explain exactly why you're being kept in the dark and how this could change everything for your silver positions. Trust me, you don't want to miss this. Here's what you're not hearing about this right now. On January 1st, 2026, China dropped a bombshell, new export restrictions on silver, effectively locking down the world's largest supply. Most people are still thinking this is just a small bump in the road, but it's not. The Shanghai Gold Exchange, the place where billions of dollars in silver get delivered every day, is now in full crisis mode. Deliveries are failing, not delayed, failing. And while everyone's focused on price moves, that's only part of the story. The real question is, what happens when no one can get the silver they need? Now, let's hit you with something real. China's restrictions are already causing massive issues, and it's not just a hiccup. On January 9th, 17.3 tons of silver vanished from the Shanghai Gold Exchange in a single day. That's right, gone. And while the mainstream media tells you it's just the market finding its range, the vaults are telling a different story. The real issue here, the price on your screen might say one thing, but the physical metal is disappearing fast. Notice what they're not telling you. There's a deep systemic problem happening beneath the surface, and it's not just a matter of supply and demand. What happens when this problem doesn't get fixed? This isn't just a temporary glitch, it's escalating. When you start seeing this level of inventory drain in one of the world's largest silver delivery hubs, you've got to ask, why hasn't anyone fixed this yet? Think about it. This is starting to resemble a systemic issue, not just some bureaucratic backlog. And here's where it gets real. China's move is already pushing global industries to the edge. Solar panel manufacturers, electric vehicle makers, they all rely on silver. And if China is keeping that supply locked down, it's not just the silver market at risk, it's the entire energy transition. This situation isn't just abnormal, it's becoming normal. And that should scare everyone watching this. Now let's talk about what's really happening behind closed doors. This isn't just about missing deliveries, it's about serious contradictions. The Shanghai Gold Exchange just hiked margin requirements to 20%. A clear warning sign. This isn't about paperwork delays anymore. It's a desperate move to mitigate risk. And here's the kicker. The exchange's own numbers are confirming the worst-case scenario. If China's silver stockpile keeps draining at this rate, we're talking about weeks before the vaults are empty. This isn't just a short-term squeeze, it's an existential crisis for global silver supply. And once you see the math behind the margin hike, you'll understand why this might be the start of something much bigger than anyone is admitting. In the last 72 hours, things have escalated even further. First, there's the delivery failure rumor. One industrial buyer reportedly requested 64 tons of silver and got just 1 ton. That's a 1.5% fulfillment rate. Imagine what happens when the rest of the market realizes that. Second, we've seen silver premiums skyrocketing. Reports from Tokyo show premiums as high as $50 over spot. This is a massive signal that the physical market is under intense stress. And third, there's the very real possibility that China is intentionally keeping foreign buyers at bay. They've locked down their domestic supply. And with each passing day, it looks more and more like they're positioning themselves for a longer game. The question is, what happens next? If this keeps up, it won't just be traders feeling the heat. It could bring global industries to a standstill. Now, let's step back for a moment and consider the real-world consequences. This isn't just about the numbers on a screen or the traders watching from afar. This is about you, the people who rely on silver for solar panels, electric vehicles, and 100 other industries. If silver is suddenly harder to get, everyone pays the price. Picture a solar company in Germany that needs 2 tons of silver to meet a deadline. They've already sold the panels, their customers are waiting, and now the SGE tells them, sorry, here's cash instead. Cash doesn't build solar panels. The ripple effect? Supply chains will break, production will halt, and people won't just lose money, they'll lose jobs, investments, and the future they were counting on. If this feels familiar, say so in the comments. Let's step beyond the outrage for a second and ask, why is this happening? What's driving China's actions? It's not just silver. This is part of a larger strategy. China's not just hoarding silver for the sake of it. They're leveraging it for industrial dominance. Think about it. They're ramping up solar capacity like no one else, installing more in 2025 than the entire rest of the world combined. They're also the world's largest electric vehicle producer. In other words, China is securing their own industrial future, and that means silver, the metal at the heart of the energy transition, is now part of their strategic toolkit. The rest of the world is left scrambling, and the market isn't just reacting, it's being reshaped. This isn't a market failure, it's a systemic shift, and those who can't see it are going to get caught in the storm. So, where do we go from here? Two paths seem clear. First, we could see a sharp spike in silver prices. If the SGE invokes force majeure, cutting off physical deliveries entirely, expect silver to shoot past $90 in a matter of days. The market's already under extreme stress, and a short squeeze could send prices into the stratosphere. But there's also a chance that we see a pullback first. If the SGE manages to stabilize the situation, perhaps through emergency cash settlements or another intervention, the market could temporarily calm down. But don't be fooled. This is just a pause before the next move. The fundamentals haven't changed. The silver deficit is real. The geopolitical forces are at play, and the pressure is mounting. The question isn't if silver will skyrocket, it's when. Here's the final takeaway. The price you see on your screen isn't the full story. The real value is in the physical metal, and right now, that's where the danger lies. Paper silver is increasingly disconnected from reality, and if you're holding paper positions, you could be in for a rude awakening when the system finally cracks. The world is changing faster than anyone's admitting. Silver is the lifeblood of the global energy transition, and if the SGE can't deliver, industries and entire economies are on the line. You don't want to be the one left holding a worthless IOU when the music stops. This is why you need to stay informed, stay vigilant, and know exactly what's happening beneath the surface. For a deeper dive into how we got here, check out my previous video on the Great Silver Wall. Trust me, you won't want to miss what's coming next. Make sure you subscribe for more real-time analysis.